Manoj Viswanathan, Managing Director and CEO of HomeFirst Finance joins us. Now, Manoj, at the outset, sincere apologies, we've just put you on hold, but the way in which we got involved with conversations on what Ayodhya could be and where things are moving in terms of the religious tourism, we actually just extended our time there. So, Manoj, are you going to Ayodhya for the inauguration?
Not for the inauguration, but maybe shortly afterwards, definitely.
Are you getting business from that part? Everybody's talking about religious tourism, new epicenters of growth and low-cost housing getting created. Just an outside question, I'll get into your numbers, but is that a new business opportunity? Businesses around religious tourism?
UP as a whole definitely is a big market for the future. We have recognized that. I think the market is also, people are also recognizing that. So we have made a couple of visits to UP. Earlier it was not in our radar for at least a couple more years. But now we have accelerated our movement into UP, our distribution into UP. So we have already put up a branch in Lucknow. We have a branch in Gorakhpur, and we are looking at a faster expansion in UP in the next 2 years.
I want to talk about your numbers as well, Manoj. Hi, morning firstly, because you've guided for an AUM growth over 30% for FY24. What kind of growth numbers have you already seen so far? And are you on track to achieve that guidance or perhaps even beat it?
The last 3 quarters, we have been delivering a year-on-year growth of more than 30%. I think last quarter was about 33-34%. So we are on track to deliver the 30% plus growth for FY24. As of now, we have our FY27 figure in mind, which is that we want to double from here where we are right now. So we have a target of 20,000 crores for FY27, and that is what we are, working towards.
The space which you represent, which is the HFC space, it's brutally competitive. Everybody wants to grow that book because it's a very secure book. Spreads are not the best. Banks like SBI have thrown their ring in the hat because they want to also make this book big. What will be a competitive edge?
Our competitive edge, from the beginning has been the way we use technology to make the process very seamless. I think historically this business has been always about, has been product led. The company says, oh, this is the product that we have and, it's a one-time purchase for you. So take it or leave it. But we have gone to the customer with a different approach. It is about trying to find a solution for that customer. So a vast majority of customers have some of the other, you can say bottlenecks in getting the loan. They don't have all the salary slips. They don't have the right kind of documentation that, ticks all the boxes with the, larger entities. So our approach has been to, customize the product and customize the approach with the customer and provide a very quick turnaround to the customer. In a housing situation, the customer is already dealing with multiple issues. Where to buy, which property to buy, how to give the down payment, which direction should the house be facing, and so on and so forth. There are multiple headaches the customer is facing while purchasing a house. So we try to make the loan process really fast and seamless for the customer. That has been our approach, and that has really worked for us. So today we are known for our quick turnarounds. We are known for our seamless approach in the market, and that's what is really bringing us business.
You're saying is exactly the right things, but the same structure or architecture has been expressed by others also. That we are digital, we are known for a turnaround, we have technology, we have customer base, we have low NPAs. It's like similar sounding commentary I get from others also when I ask them the same question. Am I right? Am I wrong? Please tell me.
You are right to an extent, but I would still say that we were one of the early movers as far as this approach is concerned. There are a lot of entities that have, come later or, come more recently, which are adopting the same approach. But there are some advantages of being an early mover. The market recognizes that, yes, this is an entity that has been keeping their commitments for the last 13 years. When they say they are going to turn it around in 48 hours, they actually keep their word. So, that is the, brand image that we carry in the market, and that brings us a lot of business.
Is there a iota of slowdown because of rural, because of inflation, because what's happening in semi-urban market and also affordability, Manoj? Let's be very clear. I mean, houses and land prices have gone up 50 to 100% depending on the pocket we are talking about, which is a serious impact on profitability because income in a sense is not growing at that level.
Yes, to some extent you're seeing that impact. So there is no impact on the growth as such, as you can see from our numbers. I mean, we have crossed our all-time high disbursal figure. We crossed 1,000 crores in last quarter. So there has not been an impact on the growth, but yes, there is some impact on the NIMs. There is some impact on the spreads, which we have been guiding for a while that yes, these spreads are likely to come down because we are likely to end up at about 5 to 5.25 kind of spreads, and that's where we are heading. So that's where the impact has come. But otherwise, on the overall demand on the growth side, we have not seen an impact.
So your capital adequacy, which is at 40%, which is strong, does that mean that ROE, which is a matrix investors look at, will only improve from here?
Yes, ROE has been continuously improving. We started the year at about close to 15%. Right now, we are delivering 15.8%. Our aim is to increase that number by at least 50 to 75 basis points every year. We are on track to deliver those kind of numbers.
With your ROE, where would be that? What is that number which you think is achievable in 3 years?
So again, our target for FY27, along with reaching the 20,000 crore mark on AUM, is to deliver a 17% plus ROE.
Plus ROE and 20,000 crore is what you would be in terms of size.
Right, in terms of AUM. Right now, we have just crossed 9,000 crores. We hope to end the year at close to 10,000, maybe 9,600, 9,700 crores. So our aim is to double that in 3 years. So in FY27, we are looking at a 20,000 crore number.
Book is loan against property.
Yes.
Do you have any loan against property?
We do have, currently we are at about 13% of our AUM is loan against property. So, if you look at the overall market, our loan against property ratio is fairly low. So there is definitely some headroom to grow that.
Asset quality become a problem then going forward because you're expanding into new geographies, and in this quarter itself there's been a marginal deterioration in your asset quality?
Asset quality has been fairly stable, not call it a deterioration. So if you look at our gross NPA numbers, it has been stable at 1.7. Even if you look at the pre-RBI number, it is 1.1. The early delinquencies are also, at industry leading levels. I mean, our one day past due is 4.5. 30-day DPD is 3%. So, there are 10 basis points up or down across quarters happens, but otherwise it has been very, very stable.
Manoj, great to have you on the show. Thank you so much for taking the time out and joining in.